making $14.6 billion in the year. So if we do accretive capital markets transactions, what we're doing is we're securitizing the Bitcoin and we're selling securities at a premium to the net asset value of the underlying commodity. We generated a 72.4% BTC yield this year from our treasury operations. So that means you have 72.4% more Bitcoin per share now than you had on January 1st. You know, for the past 4 years, we're going to raise money and buy Bitcoin. We're not going to sell the Bitcoin. And, you know, how much Bitcoin are we going to buy? You know, as I've said before, right, as much as we can buy. We're not holding back. We think that's good for Bitcoin. We think that's good for the world. We think that's good for the entire crypto economy. We think that's good for our shareholders. Generally, in deciding what kind of transactions we do, we're informed by a set of analytics, and maybe the most important one is BTC yield. Yep. And so BTC yield is a KPI. It's a metric where we calculate the accretion in Bitcoin per share on a fully diluted basis. So if hypothetically, Julian, if I had $100 of Bitcoin per share, and if my stock was trading at $100, then I could sell $1 billion of the stock and I could buy $1 billion of Bitcoin, but it would be completely neutral. There would be no accretion. That would be BTC yield equals 0. If my stock had $100 of Bitcoin per share in it and someone offered me, if they called me on the phone and said, hey, I'll give you $10 billion today if you sell me the stock at $50 a share, well, that's a negative BTC yield. That's dilutive. So you see, if I just wanted to raise money and buy Bitcoin, I could do it on a neutral basis or a dilutive basis. But we're not stupid, and our shareholders aren't stupid, you know? And so you have to assume that if you're diluting your shareholders, they will lose their enthusiasm for buying your stock. So we don't do that. And we don't do transactions that are dilutive. If I could sell the stock at $300 a share and I had $100 a share of Bitcoin, then we do that transaction, then that's a 66% spread. That means if I raise $1 billion of capital, I'm selling $1 billion of securities backed by $333 million of Bitcoin. So, and then I'm buying back $1 billion of Bitcoin. So it's like I'm selling $333 million of Bitcoin in order to buy back $1 billion of Bitcoin. That means I have a net gain, a net Bitcoin gain of $666 million. That's accretive, right? You would do that trade. That will generate BTC yield. That'll be positive yield. So, so when we're doing these things, we're considering, you know, is there a yield? Is it accretive? Now, if I took that $300 stock backed by $100 of Bitcoin, and then you offered, you said you wanted a bond from me, a convertible bond, and if I could sell the convertible bond at a 50% premium, then the strike price is $450. So that's like selling stock at $450 backed by $100 of Bitcoin. You see, if I sold a $900 million bond, it would be backed by $200 million of Bitcoin. I'm selling $200 million of Bitcoin to buy back $900 million of Bitcoin. That's $700 million of accretion.
So basically what you keep doing is you keep increasing the exposure per share for your shareholders, the Bitcoin exposure. Like shareholders get a bigger Bitcoin exposure than if they would just buy Bitcoin, right?
We generated a 72.4% BTC yield this year from our treasury operations. So that means you have 72.4% more Bitcoin per share now than you had on January 1st. Well, when you look at the amount of Bitcoin we had January 1st, that means it's like we generated 136,965 Bitcoin without any cost and without any dilution. So it was like earning 136,965 Bitcoin. And then, of course, what's that worth? Well, if you plug in $107,000 per Bitcoin, which is what it was when I tweeted this morning, that equates to $14.66 billion for the year. You know, $14.6 billion, right? Well, it's like making $14.6 billion in the year. So if we do accretive capital markets transactions, what we're doing is we're securitizing the Bitcoin and we're selling securities at a premium to the net asset value of the underlying commodity. And you can do this a variety of ways. You can do it by selling equity at a premium. You can do it by selling convertible bonds at even greater premium. You can also do it by selling straight bonds. If you just sell you sell a $500 million bond and you're paying 6% interest, well, then there's no dilution, right? You didn't issue any shares. You just bought $500 million worth of Bitcoin, and there's zero share dilution. You have an interest payment. So if Bitcoin generates 60% a year in return, and that's what it's been doing for the past probably 10 years. But for the past 4 years, since we've been doing it, it's been 60% or more. So if I'm borrowing money at 6% and I'm loaning it out to the Bitcoin network at 60%, I'm actually capturing 90% of the yield. And so I'm generating 54% in the spread. So it's really a BTC spread of like 90%, right? Yeah. But you could also say if I did $1 billion of that, I'm making $540 million a year on the arbitrage.
How should let's say a young investor, like millennial investor that starts to have money and wants to allocate it to the capital market, invest, how should they think about allocating to Bitcoin directly, to MicroStrategy, which is like a Bitcoin derivative with some kind of you can think about it as leverage, and other asset classes?
Well, I think Bitcoin is the risk-free rate in the digital assets economy. And so the best way to think of it is the risk-free rate, and by risk-free, I mean you're accepting the existential risk of Bitcoin extinction event. Okay, so you've accepted that risk, just like when you cross the street, you accept the risk of getting hit by a car, and when you live in Germany, you accept the risk of getting hit by a meteorite, right? So there is that existential extinction level risk. But once you've accepted that risk, then the risk-free rate on the fiat economy is really SOFR, the standard overnight funding rate. It's like 4.8% right now pre-tax, and it'd be like 3.2% after tax, depending on your tax rate. The risk-free rate in the crypto economy is Bitcoin. And so Bitcoin's been going up 60% a year. So you could say right now it's about 60% is the risk-free rate. But, my long-term forecast over 21 years, and I'm conservative, is 29% ARR. So when I evaluate any investment decision that anybody offers me, I start by saying, well, my hurdle rate is 29%, tax-deferred capital gain for 21 years. So, are you proposing to me an investment idea that can beat that after tax, risk-adjusted? So as you can imagine, right, that means you have to pitch me an idea that's 60% ARR, right? It's got to be an insanely profitable idea. And even then it would be kind of dilutive and distracting. So I tend to think, that the safe strategy for most people, if you don't want to take risk and if you don't want to be an investor, then you just buy Bitcoin and hold it. I think that the best ideas are ideas built on Bitcoin. So for example, if you were to say to me, well, that's good, Mike, but I want better than 29%. Okay. Well, my question would be, okay, well, do you have a house? Can you mortgage it? If you can get a 15-year loan for 6%, well, if you pay 6% interest on a 15-year loan against real estate and you invested at 30%, then you're getting 80% of the yield in the swap, right? So that's probably a way to boost your return beyond the 29%. So I think long-term cheap debt, right? I mean, not short-term debt. Like I'm not in favor of, like, don't be a degenerate and go on a crypto exchange and do a 20-to-1 levered trade on Bitcoin, because you might get liquidated on Saturday night in volatility. So that's kind of stupid leverage. I mean, people are very simplistic, especially on the web. It's like they really aren't capable of sophisticated ideas. So it's like either leverage good or leverage bad. But not really, no. Like, for example, if I give you a 100-year loan, no recourse for 1% interest, or let's make it simple. I'll give you a 100-year loan, no recourse, unsecured for 0% interest. That's leverage. Is that bad? It's like, that's no different than me just giving you the money, right? Yeah. I mean, so there's a certain type of leverage that is no different than I'm just going to give you $10 billion for free. Go bet it, and then after you're dead, maybe it will turn out to have not have worked. But how is that different than me just giving you $100 billion right now and saying just go spend it, and after you're dead, maybe people will disagree on what you spent it on? Okay, so if the terms of the leverage are good enough, that starts to look like equity. A 30-year, you could have borrowed money for 30 years for 2.75% interest 2 years ago in the U.S. I said, mortgage your house, right? And people said, oh, you're crazy. You're telling people to take that risk. Borrowing money for 30 years at 2.75% when Bitcoin is going up 60% is not stupid. It's actually the most intelligent thing you possibly could have done. The stupidest thing you could have done was sell Bitcoin at $10,000 a coin and paid off the 3% mortgage, right?
You just got, like, MicroStrategy just got added to the NASDAQ 100, right? This is a very, very big milestone, and I think this is the first time you are talking about it here. What does that mean to you? What does it mean to the company? And what does it mean to the future? Like, what potential does it unlock for MicroStrategy to be in this index?
I mean, I view Bitcoin as the digital transformation of capital, and so the entire crypto industry is about the digital transformation of the capital markets. And MicroStrategy is the leading public holder of Bitcoin and of digital assets now. And so getting embraced by the NASDAQ 100 is an excellent milestone. It means that they're recognizing the power of digital assets technology. They're recognizing the potential of digital capital. I think it's enormously legitimizing for Bitcoin. It's legitimizing for MicroStrategy, and it's very auspicious for the entire digital assets industry. And what it means is that all of the mainstream investors that have any exposure to QQQ, the General Technology Index, now they're Bitcoiners. And it's a way that we introduce Bitcoin into the equity capital markets and conventional technology investment portfolios. And I think those are all just awesome things.